In this lesson, we want to combine all these things and look at structural dimensions and structural breaks. How can we use them to our advantage and how can we put them into practice? Let's go straight into TradingView and take a look at a few charts. Generally speaking, you can use the dimensions and breaks in any chart. I'll show you an example here in the gold chart. If you are going into a chart for the first time, I would recommend that you start with a top-down analysis. This means you start with the largest time unit and look at where you are in the chart, where you currently stand, what makes sense and what doesn't make sense for you. In principle, our largest dimension is the daily chart. This means we first look at the big structure. I like to use the path for this. With the path, you can see what the trend is. In our example here, we have a high that moves us into a low, we have a lower low, we have a lower high, we have a lower low. Here on the bottom though, we have a lower high again, but we have consistent lows here. And here we can see a trend shift. We are making a higher high than before, we have a higher low, and then we can see a trend shift in the market. This way you can see what the structure is and what the major levels of the market are. Now of course you can always ask yourself the question, what is my daily structure and how do I draw it? I recommend that you consider from where to where the real impulse went on the daily chart and then measure it. You really have to keep in mind that the swing level is the level from where the impulse started, and I would recommend you to look for the levels at the daily level really conservatively. In our example, this is our high that has the major swing level right now in the market. This high led us to this low, so we have here another swing level, because this was the lowest low we got so far. Then this was the high that moved us into another low. The impulse basically started from here, moved us down. With the new low here, from this high, we moved into another lower low. And here we have our bottom, where this low didn't get broken again in this chart. So basically from here, we see this is our demand zone. And from here, we started the next impulse to the top. And we broke two major swing levels, this one and this one. So these two levels basically turn from a swing into a break of structure. We see from this high we moved this way to the low here. On this low we consolidated a bit and then we broke two highs, meaning the structure shifted from short to long. Of course the major overall structure from this high is still not broken, but you can see we are still moving upwards. And if we go to the right a bit, we see this level gets broken eventually and then we move into the long trend. For me, a break of structure would already be if we were to go above this level with only one wick. It is of course better with a full candle body, but I also see a wick as a valid break as we show an intention to go above this level. Now let's move on from the daily chart to the 4-hour basis. What we are doing here is basically the same thing. We moved from this high into the new low. So this is our swing level on H4. From this level, we moved into this low. So this is our other swing level. From here, we made a lower high, but this high did not move us into a lower low. This swing level did not get broken again. Sure, we are close to breaking it, but we never went below the swing level. This means for us that we could place a long trade here and anticipate the market to shift from short to long. Obviously, we want to wait for confirmation here. So what we could do, we could wait for a more aggressive swing level to get broken. For example, this swing level brought us down into the demand zone again. This level got broken eventually, could have ended with a break and retest setup here. Our target would have been this swing level or this swing level. And we see in this chart it would have worked. To end this trade here would have been aggressive. But as soon as this swing level gets broken on this side, you have the confirmation that the major M4 level is also broken. Also a daily level, which we can see here. H4 level and the daily level are the same basically. So generally speaking, we map our chart in D1 and we see the major daily swing levels. Then we move into the 4-hour chart and we can mark more aggressive H4 swing levels. For example, this one right here. If such a swing level gets broken, we can see a trend shift. The trend shift was we were in a short market before, but we did not manage to break this demand zone and make a lower low. So this swing level is not broken. This means for us that this zone could potentially shift the market from short to long. What we can do here, we wait for a swing level to get broken on H4, and then we can enter the market with a break and retest setup. So we would be early in the market with our trade. If you wanted, you could also get even earlier in the market, but it would be even more aggressive. We could take a look at the 50-minute structure, but I wouldn't recommend doing it in this example because anticipating a trend shift in such a zone is really risky, and you should only enter a trade if a swing level gets broken. So if you see the H4 level breaking here, then you should enter the 50-minute chart and look for an entry in this area. If you see good price action here, then you could enter a long trade and just let the market run into the major direction you're hoping for. If the market then breaks another swing level to the top, then you have even more confirmation that the trend shift happened and the market is now running in the major direction you are also heading in. So you are on the side of the big players.